I did a value investing video 8 months ago. I calculated the value to be around 3.439k. Amazon is currently sitting at around 3.32k, which is around 3% off. So it once again proved the importance of intrinsic value calculation. I've decided to upgrade my previous video for this channel, which focused purely on fundamental and technical trading. In fact, I will share from time to time my trades on my new account open on Moomoo. What is buy low, sell high value investing? Mistakes investors make. Number 1, face value of a stock. Number 2, stock that drop a lot is probably at the bottom, good enough for bottom fishing. And number 3, FOMO, fear of missing out. I will use Flux as an example. Flux was founded in 1989, specializes in water treatment, desalination plant, including operating and maintenance of the plants they build. In fact, they ventured into consumer products like water filtration system. Their business spans around the world and revenue was increasing at a fairly good rate. In the best years, their revenue of their core business in engineering, procurement, and contractor works, operation and maintenance was actually over 3 billion Singapore dollars. Share price was at 260 at its highest point. Fast forward 2021, Flux have officially stopped all operations and filed for Chapter 11 a couple of years ago. So was there any telltale sign over the years? The first signs of true weakness has got everything to do with intrinsic value, and that's why you shouldn't place too much emphasis on the face value of a stock. Let's take a look at the price action of the shares and try to find out why there was such a massive drop. We can see the first massive drop, not due to global events like the financial crisis, is here. So what happened during this period of time? One of the important components to calculate intrinsic value, which is vital for value investing, is the operating cash flow, total debt, cash, and investments. What is operating cash flow and why is it important? Operating cash flow is a measurement of the amount of cash generated by a company through its core operating activities and businesses. Operating cash flow will indicate whether a company can generate sufficient positive cash flow to maintain and grow its operations. Otherwise, it will require external financing for capital expansion. And this is shown very much in Flux case. We can see here the operating cash flow, total debt, and cash and investment for financial year 2010 to 2012 taken from Flux financial statements. You can see clearly the company is bleeding and burning more cash from negative 49 million to 5 times worse off at negative 243 million Singapore dollars. Debt is piling up from 600 million to 1.1 billion. It may seem weird to see cash and cash equivalent and investments more than doubled to 490 million, which I will explain to you how accounting standards and number massagings are putting on veils and decorating can of worms. Flux operating cash flow for financial year 2009 was actually positive at 60.6 million Singapore dollars. You must note that Flux released their financial report for financial year 2010 on 23rd February 2011. Now let us put the numbers to the price chart. This is 2008, which is the global financial crisis. You can see 29 October 2010, it was at $2.45, and the plunge to 150 Singapore dollars was by 28 February 2011. And of course, the operating cash flow got worse. The company got into very bad shape as the years goes by. So you may be asking, what other factors caused the plunge over the 3 months between October 2010 and February 2011? Perpetual preference shares. Perpetual securities are debts and not equity. The gearing of Flux went down 3 times because the perpetual securities are not recognized as debts but as equity, giving the impression that it has almost no debts and therefore it is very safe. But in reality, Flux is hugely leveraged and risky company at an extremely high gearing. There have been questions on why KPMG is willing to consider debt even after having audited the accounts, but financial experts know this, and hence the share price, as you can see, dropped by almost 40%. And this brings me to point 2. picking stocks that crashed from high. Imagine it's you looking at Flux shares on February 2011. Flux is reported, positioned and marketed as a growth company, and some investors might be thinking that since it crashed from high, it might be a steal to buy Flux without careful research on why its price plummeted. Now, also to reinforce point number 1, face value. Do you know how much was Amazon in 2011? That's right, $178, and it's worth $3,300 now. How about Tesla in 2011? It's not even $5, people. And how about now? $720. Now, the reason why I mentioned Tesla is because I will use it as an example for calculation for intrinsic value for value investing later on. Yes, you can use value investing methods for growth stocks too. FOMO, fear of missing out. The classic example of FOMO, they pump the price up and dump it at 2. Next classic example, media crap. Media equals excuse equals crap. Today Wall Street tanked because Powell is gonna speak. Tomorrow Wall Street is bullish because Powell is gonna speak. Today the market ignores COVID-19 and its impact to the economy. Tomorrow the market gets scared the shit out by COVID-19. Everything that is happening in the market makes you feel that it is one big fat manipulated scheme that is out to suck your blood dry. But once you get your mindset right, do your due diligence, you'll be more confident, differentiate good and crap news, filter out noises, appreciate good advisors. You will be able to stick to sound investing plan, improve your portfolio and make good returns. So how to calculate intrinsic value? I'll do a short version by using Tesla as the example, also by proving value and growth investing are not exactly bipolar, and you can find intrinsic value which can be utilized for both kind of trading strategies. Operation cash flow, total debt, cash equivalent, and investments are important for intrinsic value calculation. I shared earlier on what is operating cash flow and why is it important. Here are some examples on where do you find the operating cash flow on a balance sheet. Total debt. The lower the debt, the better it is. Typical gearing lower than 0.6 is considered to be acceptable. I will not go into the technical details in this video as it's not necessary, but you have to consider these debts, and it is important that you read on the differences between the type of debts, between good and bad debts, secured and unsecured debts, long-term and short-term debts. Here are some examples of that. Cash equivalent and investments. Cash equivalents are the total value of cash on hand, including items that are similar to cash, which is highly liquid assets. These equivalents will provide companies with high credit quality, which is very important as it shows the financial health of a company. Before I show you my formula for calculating intrinsic value, let's take a look at Tesla's stock price chart and the operating cash flow statements to prove the correlation between intrinsic value and a cyclical or growth stock. You can see in year 2013, you'll notice that the second half of year 2013/14, Tesla stock price jumped from $5 to $40+, and in year 2017/18, the price was hovering around $60+, $70, and in year 2019 December, that's when the price exploded and rocketed all the way to the peak of 900+. Of course, now in 2021, in August 17, the price is hovering around $700. Now for the operating cash flow, which is the single most important number for intrinsic value calculation. You can see from 2008, the only time it had positive operating cash flow was in 2013, which their quarterly report would have already mentioned, and hence the most straightforward way to explain why the price increased 8 times to $40+. Then moving forward in year 2017-18 was when Tesla had another year of almost positive operating cash flow with a strong profit guidance for financial year 18, and financial year 19 reports released in Q1 2020 was when the operating cash flow increased exponentially and also sent the stock price flying. Okay, so we are now at the final part of my video on how to calculate the intrinsic value. Stock that I'll be calculating or be sharing with y'all will be on Tesla. Okay, this is the same calculator I shared 8 months ago on the other video. These are the numbers that I plugged in from the financial year 20 financial reports for Tesla. So this is the operating cash flow, total debt, and the cash equivalent. You can just search it internet and all the numbers will come out. Okay, now next we'll come to the interesting part, which is the growth rate. To be safe, 10 years. Okay, look at what the pandemic has done to us. All right, so every 10 years for cash growth rate, the first to third year at 80%. Why? This is because, right, Tesla have already mentioned that or hint about their growth rate for this year 2021, and judging from the reports that I dig out, it's probably about 80 plus to 90%. So annualized over 3 years, I put it at 80%. The 4th to 5th year, supposedly they maintain at a very interesting rate or good rate, it will be 60%. It could be higher, but just to play safe, I put it at 60%. And for the 6 to 10 years, it will dwindle down all the way to 30%. Okay, this is on the safe side again. This is the number of shares outstanding. So right now it's at 1.08 billion. Okay, this is the cash flow calculated formula is sum of F18 to O18. So it's this one. Sorry, it's this one. All right. Okay, so this is for the year 2021 all the way to 2030. I should put it 2022, but it's okay. I'm just lazy. Okay, this is the estimated cash flow. So you can see the formula here is F3, which is the operating cash flow, the most important one, and then plus F3 times F7, which is the growth rate. So we stipulate the growth rate, right, for the first 3 years to be around 80% each year, which is amazing. For the 5th year at 60% and the next 4 years at 30%. This is Tesla. We're talking about SpaceX. Discount factor. There's always a discount rate for PV because the value now, $1 now doesn't mean $1 in the future. Probably due to inflation and stuff, you'll start to go down. So we use a 6% discount rate. This is my favorite number to use. So, and then this is the value after the discounting all the way until 2030 or 2031. Okay, the formula is over here. Okay, this percentage, right, is 1 plus 0.7, which is the 6% to the power of 10. This is to the power of 9, all the way compounded all the way until 10th year is about 180%. This is the intrinsic value before cash or debt. The value formula is F13, which is over here. Total cash flow, the present value of 10 years cash flow divided by F11 number of shares. You will change again the values, so I can only use the most up-to-date value right now for all this. So this is the deduct the debt per share. The debt is of a concern, but for intrinsic value calculator, not that much because the debt, secured and unsecured, good and bad debts, and everything plays a part. And as long as their operating cash flow is very healthy and the overall cash and investments and cash equivalent are very healthy, we do not have to worry about that debt unless it's like few hundred billion. That's a different thing. This is the cash per share, the F5, which is cash equivalent over the number of outstanding shares. So this is the final intrinsic value of 747. If you take a look at the current share price now, this is about there. So I would say 10 minus 5 to 10% differences, right? Okay, to play safe because we need to have some safety net. Probably I wouldn't really buy into Tesla now because it's not... Other than the market is on a downtrend or hovering sideways now, I would not buy Tesla because it has already increased too much unless there's some real catalyst upcoming in the next few years. Otherwise, I would stay away from Tesla now because the gains will probably not be as much. I was correct for Amazon. I was correct for Netflix also. So I think I would trust my instinct on not to buy this until I see any catalyst or really interesting news that Tesla is going to do. Of course, the Bitcoin that Elon Musk played could add some value to this, but won't be that much, okay? I will share more of my investing tips in my next video, which will be on technical analysis on investing. In simple terms, is it a good time to buy a particular stock for investment? And you'll be surprised to find out technical analysis actually plays a very good part in deciding whether for the short term, is it a good time to buy the stock or not. So do subscribe and stay tuned.